Good morning, students. We already started the chapter Dissolution of Partnership Firm. So, how to wind up? What are the procedures we have to follow to wind up the organization? That and all we discussed in the previous class. So, remember all those theories what I told you. Now, we'll start today. What are the accounting procedure on dissolution of the firm? So, here the partnership firm entirely we are going to close down the business. So when you close the business means actually we can speak like it is closing down of the balance sheet. We have to close all the balance sheet. All the balance sheet means the balance sheet available for this year. So actually whatever available in the business that will be reflecting in balance sheet. You know that asset side all assets will be there, whatever liabilities are there outside as liabilities and capital and other reserves, all credit balance items will be there in the liability side, all debit balance items will be on the asset side, so that we know. Now we have to close the business. So for closing, what are the accounting procedures we have to follow, just we will discuss that. Okay, so accounts to be prepared, what mainly four accounts we have to prepare. One is realization account, second one is partners loan account, third one is partners capital account, then fourth is cash or bank account. So here usually last we prepare balance sheet since the business is closing, so here no balance sheet will be there, here it will be cash or bank account. Okay, now we'll study how to prepare realization account. So realization account first we'll see. So it is open for disposing all assets of the firm and making payment to all the creditors. So here realization account means a separate account we are opening to close all the assets and to for making payment of all the liabilities. So in the previous class also I told you we have to sell all the assets. From that selling price whatever we receive, that money will utilize for making payment to the outside liabilities. Okay, so how to make or how to make realization account, what are the journal entries to deal with, that we'll discuss today. So basically it is a nominal account. So realization account is nominal account. So nominal account rule, you know, debit all expenses and losses, credit all incomes and gains. Then it is prepared to find out the profit or loss on realization of assets and payment of liability. So as usual, nominal account means our purpose is to find out what the profit or loss, just like revaluation account also nominal account nature. So this you remember, 1 mark question will come. Revaluation also nominal account in nature. Nature of realization account also nominal, don't forget. Okay, so nominal account means profit and loss account also nominal account only. So nominal, all nominal accounts basically for what? Debit all expense, credit all income. So the difference will be of course profit or loss we will get. So that will be distributed among the partners. Okay, so how to prepare realization account? First we will discuss that. So here we are closing the business. So I told you we have to close the balance sheet. So for closing the assets and for closing the liabilities, first we have to pass journal entries. Okay, so to close the assets means assets, you know, already assets got one debit balance, that's why already it is there on the debit side, asset side of the balance sheet. Now to close that item, what we have to do, we have to give credit to asset. So what will come in realization account? Asset will be, realization account will be debited to sundry assets. So where we will transfer, assets will be transferred to the debit side of realization account. Understood? So here the sundry asset got credit. Okay, so realization account debtor to sundry assets means first we have to do this one. Assets which are to be transferred, first we have to take from book value only. So balance sheet will be there in the question. So in the question whatever assets are there in the balance sheet, that you have to take and write on the debit side of realization account. Clear? Now but some points you have to remember, you cannot take all the assets because all assets we cannot sell and get money. Okay, so those assets which can be converted into cash, that assets only you have to take. Otherwise, what is the purpose? We are going to sell these assets. So those assets which can be which can be sold in the market, and from which we get some amount, that assets only you have to transfer. Okay, so points to be noted, just to discuss first. Only assets that can be converted into cash to be transferred to this account. Already I told you, that means fictitious assets. Some other assets will be there. It is just appearing on the asset side just because of the debit balance. It is appearing on the asset side. Actually, it is not asset at all. So, for example, such items are what? Advertisement expense account, advertisement expense, advertisement. Then what? Deferred revenue expenditure, P and L account debit balance. So profit and loss account debit balance means what? Loss. Okay, already so many times I told you, profit and loss account, if loss is coming any particular year, we will show it on the asset side because it got debit balance. But if the, profit is coming, we will show where? On the liability side. Like that, advertisement expenditure. So these items, what we did, we have a, we have to write off it in the partner's capital account. Clear, no? In admission, change in ratio and all we discussed. So P&L account if appear in the balance sheet, deferred revenue appear in the balance sheet. These are not real assets, these are not fixed assets. Remember, these are fictitious assets. Sometimes question will come, write one fictitious assets example. Okay, so these are not real assets, you cannot sell it in the market. These are really loss for the business. Because of debit balance, it is just appearing on the asset side. So this will go where? To the capital account only, you cannot take it to the realization account. So fictitious assets don't take. Okay, so what is the rule? Only those assets which can be converted into cash, that items only you have to take. Okay, now here one example I'm showing you. See here, only asset side I am giving because we are discussing about assets. Okay, so here, see here, cash in hand, stock, bills receivable, furniture, advertisement suspense, profit and loss account. So when we prepare realization account, we prepare as usual like revaluation only, don't change the name. So realization account also we write for debit side, then credit side. Okay, particulars amount, particulars amount. Once again I'll write realization account. Okay. Now these assets, actually this is on the asset side balance sheet. Actually all assets you have to transfer where? On the debit side of realization account. So first is what item? Cash in hand. So cash in hand, cash in hand you have to take or what? Cash in hand. I told you those assets which can be converted into cash you have to take. Cash in hand is already in the cash form, so no need to take that. Cash account we prepare separate. Last account is what? Cash or bank account. Correct? So cash in hand, cash at bank don't take. Understood? Now next is stock. Yes, stock can be converted into cash, no? Yes, you can write stock the same value in the balance sheet. That is called what? Book value. Suppose here it is 5,000. Here also we write what? 5,000. Okay, 5,000. The same 5,000 you have to write. Now bills receivable. Yes, you can write. It is normal asset only. Furniture. Yes, you can write. Now advertisement suspense. This you don't take here. This will go where? In the capital account. Capital account where? Debit side. It is loss for the partner, so debit side. Partner's debit side. Capital account debit side. P and L account. This also will go where? Debit side of capital account. If P and L comes here, it is profit. P and L appear here, this means what? Loss. P and L account on credit side means loss. P and L account this profit side, not credit side, asset side means loss. Liability side means profit. This also will go where only? Capital account only, but it will be credited in the partner's capital account. Capital account credit will give. So here P&L account, all those items appear, will distribute like a loss in the capital account of the partners. Understood? Okay, so this way you have to transfer. This is called what? Closing of asset or transfer of assets. First we will not sell the asset. First we will move the assets from balance sheet to realization. That is called closing of asset. Don't misunderstand. Closing of asset means not selling of asset. Closing of asset means we are transferring all those assets in the debit side of realization account. Just a transfer only. Now when we sell it, we will write in the opposite side, means credit side. Okay, so automatically the profit loss will be adjusted between the credit and debit side. That's why we are transferring like this. Okay, so automatically the items will be closed from the balance sheet also through this opposite journal entry. Okay, पहले इसका assets balance was debit balance, now it is by doing this debit side, now it got credit balance, so asset debit and credit cancel. Now the item is removed from the balance sheet. Okay, now selling will come later only. Now this is only the transfer or closing of asset. Okay, okay. Now this fictitious asset I told you, then where it will go? Fictitious assets will be transferred to partners capital account. So we have to transfer to capital account. So capital account, where it will go? 2 means debit side of capital account. Partners capital account is debited, so this item you have to write on the debit side of partners capital account. Understood? No? So what I told you, realization account is prepared to find out the profit or loss of the business due to the dissolution or change in the value of assets and liabilities. Okay, but some rules you have to remember. Only those assets which can be converted into cash, that only you have to transfer. Fictitious assets don't transfer. Fictitious asset will be transferred to partners capital account, and cash in hand, cash at bank don't transfer because already it is in cash form. Moreover, we prepare cash and bank account separately. Either cash or bank account will prepare separately. Now other points: if there exists a provision against any asset, such as provision for bad and doubtful debts, provision for depreciation, the assets should be transferred to realization account. The provision will be transferred to credit side of realization account. Yes, you know, some provisions or some assets or provisions we are created for what? For against assets. So provision against asset means we are taking extra precautions, to avoid a loss to that asset. It is like, you know, we are protecting that asset. That is called provision against one asset means. Okay, so different types of provisions are there. Some provisions are merely just for simply we are creating reserves and all, but provisions usually we create against some assets because to protect that asset. For example, provision for bad debt means to protect the debtors amount we are creating, or we are taking an extra precautions, we are saving some amount in provision. Okay, provision for depreciation is also what? It is against asset only, so asset value will decrease 1 by 1 year. So to avoid that loss, we are taking an extra precaution and saving amount and keeping in the business. That is called what? Provision for depreciation. Okay, so these are the amounts which we are keeping against some assets. Investment fluctuation reserve. Investment fluctuation reserve is created against an asset. What asset? Investment. So that also we created against an asset. So whatever provision or reserve you create against any asset, remember that asset will also have asset we have to transfer where? To the realization account. Asset we have to transfer to realization account, but the provision what you created, that will be transferred to credit side of realization account. So here asset you have to transfer to realization means asset normally where we transfer? Debit side. okay, but the provision you have to transfer to the credit side. Okay, so one example I tell you. Suppose debtors is 50,000 and provision for bad and doubtful debt is 5,000. Okay, now how you treat with this debtors, asset. This asset we have to transfer to debit side of realization. So realization account previously I explained. So debit side what will go? Debtors will go. Credit side this provision will go. You no need to minus plus something like that, nothing is there. 50,000 directly will go to the debit side, 5,000 will separately go to the credit side. Understood? So any provision you have to see that that provision or reserve is created against the asset or not. If any provision created against asset, that you have to transfer like a normal asset, that asset you transfer, but the provision should be credited in realization account. So these rules you have to remember. Okay, now journal entry for the transfer of provision against asset. So any asset, any provisions are there against asset, so all those items will be credited in realization account. Okay, so realization account, it will be credited in realization account. देखो, provision for bad debts, provision for depreciation, machinery replacement reserve. Machinery replacement reserve is for what? To replace the machine, that is also against one asset, machine. Investment fluctuation reserve or fund, this is also against investment, against investment, so that also what? An asset. So these all reserves or provisions are against one asset, so it will be going to the credit side of realization account. देखो, realization account में credit side में जाएगा. Then cash and bank are not to be transferred to realization, that I already told you. Assets are always transferred at its book value, that also I told you. Asset always, balance sheet value is called what? Book value. Book value means balance sheet value. Balance sheet में जो value है वही transfer करना है. Okay, now these are the things about assets. I hope you understood. Assets over. Now liabilities. Liabilities will study. Liabilities as usual. How asset you transferred on the debit side to the debit side, just like that liabilities will be transferred to the credit side of realization account. Okay, so for that journal entry is what? Sundry liabilities account debtor to realization. Means realization is credited, means that item is going to the credit side of realization account. So here also some points you have to remember. First point is only third parties liabilities are transferred to realization account. So what type of liabilities you have to transfer? Third party liability means outsiders liabilities. So liability side, I think you remember, you can see three types of items. One is category of outside liabilities, means the amount we have to pay to the outsiders. We borrowed from somebody, that we have to pay to them. Another category is what? Reserves and provisions or profit and loss account balance, whatever we created, that is there. Okay, so that will go to capital account. And the capital of the partners, the original investment made by the owners in the business, that capital also appear in the liability side. So in out of these three categories, only what we have to pay to outsiders first. So that outsiders money only you have to transfer where? To the realization account. Okay, so don't take the capital account and other reserves. You take only what? Outsiders liability to the credit side. Okay, provisions I told you already. Provision against asset, anything is there, that you have to transfer. But any other general reserve, any other things, normal reserves and all, P&L account balance, that will go to the capital account. So outside is third party liability means creditors, bills payable, bank overdraft, outside loan, provident fund, partner's wife loan. Remember, partner's loan is not outside liability. Partner is owner of the business, so when a partner has given loan, that we will pay separately in partner's loan account. Okay, we will not transfer to realization or capital account. We never transfer in these two accounts. partner's loan account we have to prepare separately, but partner's wife loan, so partner's wife is an outsider for the business, okay, so that we have to transfer here. Usually this partner's wife will be there in your question. Then outstanding expenses, any amount we have not yet paid it, so um, that also we have to transfer as what, third party liability. Clear, no? So only third party liability you have to transfer to the credit side. Then partners loan accounts are not to be transferred. Partners loan account, I told you, partners wife's loan we have to transfer because it is third party. When you transfer, you remember this only, this is third party or not, outsider or not, that only remember. Partner ka loan, separate loan account we have to prepare, okay. Then undistributed profit, देखो, general reserve, reserve fund, profit and loss, credit balance also not to be transferred to realization account, it is transferred to partners capital account. This is what I told you. So three category of items are there on the liability side. When you get a balance sheet, only outside liability you transfer to realization. Other profits and reserve, what you have to do, you have to distribute in the capital account. And a partners loan, separate account we prepare. Partners loan we prepare separately. Partners wife loan is included in outsiders liability, okay. Now any undistributed reserve, anything is there, this is not reserve or provision against asset. Any provision against asset, I told you, asset will transfer to realization, provision will transfer to the credit side of realization. But these are the reserves and provisions or profit and loss account balance. This is not created against asset, okay. So general reserve, reserve fund, contingency reserve, profit and loss account, workmen compensation reserve, these reserves are just a reserve created and we are keeping it. It is not created against asset. This is the amount we are keeping in the business. For any purpose we can use it, but WCR we have to use for that purpose only. Other reserves we can use for any purpose. So all these reserves, you can see this is not representing any asset. So like that reserve or provision we have to transfer where, to the partners capital account, okay. So general reserve, reserve fund, contingency reserve, pre-handle account, so all these items where will appear, on the liability side of balance sheet. Now we are discussing liability side, okay. So outsiders liability ought to transfer to the realization account, but these type of reserves which is not representing any asset, that you have to transfer to partners capital account. Any provision or reserve representing an asset, that you have to transfer where, to the realization account. So don't forget, okay. Some rules you have to remember, then only you can solve the questions here. Then WCR, that claim may be more or less, that situation is there, that we will discuss separately, okay. But WCR also where it will go, partners capital account, but depends on the case. The WCR separately we discuss, okay. Okay, now we'll discuss the WCR. WCR, if no claim is there, no claim means WCR is there in the liability side, but adjustment no claim is there. So where will go, the full amount of WCR we have to transfer to partners capital account. If the claim is less than WCR, so if claim is there, that is the reserve is more and the claim is less, then what we have to do, WCR account debtor to realization, then to partners capital account. So whatever claim is there, that equal amount we transfer where, to the realization account, then the remaining amount will transfer to partners capital account, okay. Suppose WCR is 1 lakh, example we'll discuss next, okay. And a claim is only 50,000, what will do, WCR debtor 1 lakh we write here, realization account, what is the claim, 50,000. So in realization 50,000 will go, and remaining how much, 50,000, that who will share, for partners will share, understood. Okay, so equal to claim amount you will go to the realization account. Now the claim is equal to WCR. Now WCR is 1 lakh and claim also 1 lakh, then the full amount of claim or reserve will go to where realization account. Okay. Now next case is claim is more than WCR, means WCR is 1 lakh but the claim is 1,20,000. Then what will do? Only the this one claim amount how much? 1,20,000. The full amount 1,20,000 will go to the realization account. Then one more entry in all these situation for payment of we will have to pay money, no? For that we have to pass journal entry realization to bank. That means the WCR whatever is there going to the credit side of realization. You see, in all this situation the realization account credit side it will go by WCR, by WCR, by WCR. Okay. But when you make payment it will come to the debit side, realization account debtor to bank. So it will adjust each other what you are transferring on the credit side and debit side. Okay. So discuss one question. Okay, so here A and B are partners, ratio 2 is to 1. The following cases are given. So case 1, WCR 1,50,000, 10 you add here, no claim. Next is WCR 1,50,000 but claim is 90, less than WCR. Then third case WCR 1,50,000, claim is 1,50,000, equal to WCR. Now WCR 1,50,000 and claim is 2 lakh. So more than claim is more than WCR. Then no WCR but claim is 40. WCR we didn't create but claim is there 40,000. So all these situations we discuss one by one. So two partners ratio is 2 is to 1. Okay. Okay. So first case answer we'll discuss. See, first case WCR 1,50,000, no claim. So no claim is there. So what we can do? Full amount we can transfer to partner's capital account. Okay, 1,50,000. So when there is no claim, then it will go to capital account. So 2 is to 1 ratio we divided 1,50,000. Okay. Now second case WCR 1,50,000, claim is 90. So this 90 will go where to realization account. Remaining will go to the capital account. So WCR always debit. You remember WCR in all situation WCR amount will be debited. Okay. So here WCR how much available in the balance sheet? 1,50,000. And realization how much? The claim will go to the realization account 90,000. Understood? Realization by WCR will come. Then remaining amount 60,000 partners will divide in 2 is to 1 ratio 40 and 20. Okay. Then for making payment realization to bank. So if you prepare realization account, how it will appear? This posting I'll show you. Dekho. The second case posting how will come? Realize WCR to realization. So realization may by WCR. Correct, no? Credit side WCR will come how much? 90,000. Okay. Now we are making payment where realization to bank. So realization to bank here will come 90,000. Only WCR case only I'm showing here. Before this what will be there? Those asset liabilities whatever we transferred that will appear. Now you see both side that WCR over. Okay, 90,000 we took but 90,000 paid also. Remaining amount they shared. Okay. Now okay, actually this is repeated the second case only. Third case we discuss. Third case WCR is how much? WCR 1,50,000, claim 1,50,000. So what to do? Full claim. Whenever claim is there, it will go to realization. Remember. So full claim is going where? To the realization account. Payment also it will come 1,50,000. 1,50,000. Okay, so WCR to realization 1,50,000, realization to bank 1,50,000. So both will go to the realization. Now next case, fourth case is WCR 1,50,000, claims 2 lakh. Claim is more than WCR. So how much WCR available, that only will go to where? Realization account. Remember that. Don't write 2 lakh. How much you have WCR 1,50,000 to realization, that only will go to the realization account. Then bank, when you make payment, you cannot say we have only 1,50,000, we will give you 1,50,000 only to the worker. So because he is claiming 2 lakh, we have to give 2 lakh, means we have to pay 2 lakh. So realization to bank 2 lakh. So in this case, how realization account will appear, you see? So if we make realization account here, just I am writing, okay, how it appear, this posting how will come? WCR to realization. So by WCR, how will come? 1,50,000. This posting how will come? Realization to bank. So 2 will come debit side, to bank 2 lakh. Clear? Now debit side is 2 lakh, credit side is 1,50,000. So this is debit side, means our loss side, no? Yes, credit side, you if you get more amount, that is profit. So now loss side is 2 lakh, 1 lakh is credit side. That means 50,000 shortage you have, that you have to adjust from other amount. Okay, so automatically it will be getting adjusted. Okay, now fifth case, there is no WCR and the claim is 40,000. So no WCR is there. If no WCR, no need to transfer to realization. You have to make payment only. So realization to bank. The only debit side it will come. Credit side nothing will go. Clear? Okay. So these are the situations. Okay. And you write it properly, understand it properly. It is very easy actually. Only thing you have to remember the rules properly. With the reason you remember, then you will not forget. Okay. So this much only for today, and we will continue the next class. Okay, till that, bye, take care.